So gold is now maybe about $25 higher than it was a month ago when the GDX and the GDXJ hit record highs. And now the gold has made a new record high that eclipses that high a month ago. The gold stocks haven't done it as well. I think, we're going so much higher than the current price. Whether you buy at 2,500, 2,400, 2,300 is immaterial. What is material is if you don't buy at 2,500 because you're waiting for 24 or 2,300 and you never get it, and the next thing you know, we're at 5,000. And then you're like, well, I'll buy a pullback to 4,500. Well, then just buy it now, right? It's a lot cheaper than buying it a lot higher.
Peter Schiff, a prominent financial commentator, has recently drawn attention to a notable trend in the gold market. Since the turn of the 21st century, gold has experienced a significant surge in value. Back in January 2001, the precious metal was priced at under $300 per ounce. Fast forward to today, and it has soared beyond $2,500 per ounce, a staggering increase of about 8.3 times. This impressive rise highlights gold's enduring strength as a reliable asset, especially during periods of economic uncertainty and inflation. Recently, gold achieved a new milestone by surpassing $2,500 an ounce for the first time ever. This surge is largely fueled by speculation that the U.S. Federal Reserve may reduce interest rates in its upcoming meeting. Simultaneously, recent data reveals a marked slowdown in U.S. home construction, which has dropped to its lowest level since May 2020, at the height of the pandemic. This decline further intensifies existing economic concerns and inflationary pressures. In response to these developments, money markets are now predicting a series of rate cuts totaling 3/4 of a percentage point by the end of the year. These expectations, along with a strong rally in global stock markets, have driven gold to its recent highs. However, despite gold's impressive performance, Schiff observes that gold mining stocks have yet to fully reflect this rise in gold prices. For example, while gold itself has reached a new record, indexes like the GDX Gold Miners ETF and the GDXJ Junior Gold Miners ETF have not surpassed their previous highs from a month ago. Typically, in a strong bull market for gold, mining stocks would lead the way, benefiting from their leveraged exposure to gold prices. Investors often push these stocks higher, anticipating future gains and increased production. However, in the early stages of such a market, mining stocks may lag behind gold due to skepticism about the longevity of the rally. This uncertainty can hold back the performance of mining stocks until confidence in the market solidifies. We'll be presenting clips from Peter Schiff's interview shortly. But before we get into that, please take a moment to like this video, subscribe to our channel, and turn on the notification bell so you never miss an update. Your support is greatly appreciated, and we hope you enjoy the content.
I think Bitcoin is down about 37% over the past 3 years in terms of gold. Nobody is talking about this new high. And really, to put it in perspective, think about where gold began this century, or even the millennium, right? On January of 2001, gold was still under 300. So gold, so far this century, it's been about 24 years into it, right? It's risen eightfold, more than eightfold, 8.3-fold, maybe a bit more. Contrast that to the Dow Jones. The Dow was about 10,000 when the century began. It's about 40,000 now. So the Dow's gone up 4x, gold's gone up 8x. Now, sure, the Dow has paid dividends. Gold hasn't. But as far as price is concerned, the Dow has lost half its value priced in gold over those 24 years, even though the nominal price of the Dow has gone up fourfold. But I think that the trend is going to accelerate. I think gold is going to go up more than eightfold over the next 20 years. In fact, it could do that over the next 5 or 10 years, because the amount of inflation that has been created over the last 5 or 10 years dwarfs what we created during the first 5 or 10 years of the century. And we're going to create even more over the next 5 years, regardless of the outcome of the election. I'm going to talk a little bit more a bit later about what Kamala Harris is promising, which is all highly inflationary and extremely good for gold. Also, if you look at what happened in the mining stocks, they were up this week about 5%, a little over 5%, which is, not too shabby for a week. But when gold is up 2.6% to an all-time record high, you would expect a bigger move. In fact, the gold stocks as an index, as a group, did not make even a new 52-week high this week, let alone all-time highs. There were a few stocks that we own for clients in our managed accounts: Agnico Eagle, IAM Gold, I think Alamos Gold, also Barrick Gold, interestingly enough. Those 4 stocks made new 52-week highs. I'm not sure other ones. Interesting, Barrick is the one that got downgraded to basically a sell right at the bottom in March of this year. And now it's at a 52-week high. So there were some individual names that made 52-week highs. But if you look at like the GDX, the GDXJ, those indexes still need to rally about 2.5% from here to make a new high, which they set a month ago. But when they set that high a month ago, gold never got above 2,500. The high back then was maybe about 2,480. So gold is now maybe about $25 higher than it was a month ago when the GDX and the GDXJ hit record highs. And now the gold has made a new record high that eclipses that high a month ago. The gold stocks haven't done it as well. Normally in a bull market, you would see the gold mining stocks leading the miners because they anticipate the rise of gold. Stock markets are forward-looking. Stock investors are looking at future earnings, and they're factoring in the future price of gold. So normally in a bull market, the gold stocks would be leading the metal, except when you're in the really early stages of a bull market. You see, then there's a lot of skepticism, there's a lot of fear and doubt. People don't believe the rally. And that's what we have now, because we're early. We're at 2,500 gold, and the bull market is early. Because if we were later in the bull market, the mining stocks would be leading. But that's going to happen.
Recently, mining stocks have started gaining traction as commodity prices, particularly gold and silver, experience a renewed surge. Amid ongoing inflation concerns and global economic instability, investors are increasingly turning to precious metals as safe haven assets. As gold prices remain robust, mining companies are gradually witnessing a rise in their stock values. However, many of these stocks remain significantly undervalued compared to the soaring metal prices. In 2024, several leading companies in the mining sector have reported impressive earnings growth, driven by the increased global demand for gold and silver. This trend reflects a broader shift as central banks around the world continue to accumulate gold reserves and geopolitical tensions drive investors to seek refuge in tangible assets. Yet, despite these positive developments, mining stocks have not fully caught up with the momentum in commodity prices. This gap between the high price of gold and the relatively stagnant performance of mining stocks presents a unique and often overlooked investment opportunity. Even though gold has surged more than 8-fold since the early 2000s, many mining stocks are still trading at prices lower than they were over a decade ago. Peter Schiff, a respected voice in financial circles, emphasizes that this discrepancy reveals a significant disconnect in the market. For savvy investors, this could be a golden opportunity to capitalize on stocks that are currently priced as if gold were far less valuable than it is today. Given the potential for these stocks to rally as the market corrects itself, now could be an ideal time to explore these undervalued assets.
If you are a risk taker, which I am, you want to have more mining stocks, because these stocks, again, are so undervalued relative to the current price of gold, because investors are waiting for gold prices to fall. Plus also, the cost of mining has gone up a lot. And every time one of these mining companies comes out and they miss their earnings because their costs are up, the stocks get absolutely killed, right? Any bad news and a stock gets decimated, because that's how little conviction the gold stock investors have. They're so scared. And even when, you beat earnings, the stocks go up, but not nearly as much as they should. But I think what's going to happen when you get a huge move up in the price of gold, I don't care if the costs go up. It's not going to matter, because they're not going to go up anywhere near as much as the price of the metal, because there's so much pent-up upside that we have. I think, one of these weeks we could see gold up $500 to $1,000 in a week, right? I want to make sure that all of my listeners have all the gold they need and all the silver they need before we have that week, right? There's no point waiting. I'm sure I'll get new customers then, right? When gold really starts to move, people who haven't been following me, who've never bought any, yeah, they'll eventually show up and start buying. But I want all the people who are listening to me now to already own gold. Don't wait or silver and buy it higher. But getting back to the mining stocks, this is where the big gains are going to be. Because I talked about how the price of gold is up 8-fold since the year 2000. There are many gold stocks that are lower than they were 24 years ago. I mean, I own some of those. Now, I also own some that are way up, but as a group, they're not up that much. I mean, most of them are above where they were in the year 2000, but the majority are below where they were in the year 2011, when gold topped out at 1900. Most gold mining stocks are well below where they were in 2011. So these stocks are very, very cheap. They're not going to stay cheap forever, right? And while they are, you got to take advantage of it by buying them. And you want to get your positions in these mining stocks as soon as possible before the world wakes up and realizes how cheap they are. Nobody is paying attention. Again, they're not talking about it on CNBC because the average investor couldn't care less about these stocks. And so CNBC doesn't even bother to cover it. Why are they talking about Bitcoin all the time? Well, because that's what their listeners care about. That's all their advertisers are advertising, Bitcoin or other cryptos. Nobody is talking about gold, right? Well, that's when you want to buy it, when no one's talking about it, right? By the time everybody is talking about it, the price is going to be much, much higher. And by the time your typical, portfolio manager, whether it's a mutual fund or a hedge fund or some of these pension plans or endowments, by the time they start buying these gold stocks, it's going to be because they are way, way up. That's what's going to put these stocks on their radar.
The short-term outlook for gold prices remains positive, driven by a weakening US dollar, anticipated rate cuts, and ongoing geopolitical uncertainties. If the Federal Reserve moves forward with a rate reduction in September and geopolitical tensions continue, gold may be poised to reach new heights. If this message resonated with you, we'd love to hear your thoughts in the comments below. If you enjoyed this video, don't forget to give it a thumbs up, subscribe to our channel, and turn on notifications so you never miss our latest content. Thank you for watching.